Welcome everybody to the London session. If you're here for the first time, this is TopstepTV. My name is Deeyana Angelo. I've been trading for 16 years. And out of those 16 years, for the last 11 years, I've been a prop trader, mainly for the commodities and markets such as crude oil and gold. So focusing more on metals and energies markets. All right, so let's see what we've got. These are some of the stats that I've been working with recently, but let's have a look at crude oil first, because that seems to be the only thing that's moving right now. So crude oil, as always, we're going to start on a very large time frame. And I can see some people are already FOMOing today. It's like, crude oil falling, let's go, what's happening? Chill, right? Because we have inventories today. We have the inventories. And what does that mean? It means that very likely a lot of the moves that we're going to see are either just hedgers, commercial hedgers, which are the ones who usually drive these markets, are positioning ahead of that. Sometimes it can lead to some more extended moves, but most of the time they will be pretty fake outy. Is that a word? Fake outy? So we're going to see what this crude oil does. I have some levels coming up around 74 evens. So this is the weekly chart. As you can see, we've unglued ourselves from the weekly demand that I was looking at probably last week, I think it was, as a potential bounce, and that's exactly what happened. Let me just clear up some of these from some of the intraday levels that we were marking. I do have the previous NFP range marked on this chart, and we are about to sort of come into that. So I don't really want to do anything until we get to 74.14. But as I kind of start drilling down through the levels, it's going to become a little bit more obvious. So let's go to the daily chart. So there's some signs that the demand is bringing us a temporary bounce. Now, whether that's going to be sustained or not, that's an entirely different question. Right, so that's the weekly chart. What's going on the daily chart? So we have a supply that was, I suppose we could call it a drop-based drop formation. And from there, let's grab a rectangle. From there, we do have a bit of a weak-ish reversal. Why do I say weak? It's because the first reversal that we got from there was not able to go through the bottom of the previous day. So we didn't take out the low of the day, the day when we started rejecting this. It's happening now, but like I said, I do have some levels around 74.20 all the way down to 74. So that would be like my earliest area to get involved. Right now, we are sort of up in the air, middle of nowhere. I have nothing to actually give me some structure, some support in order to make a better trading decision. So if we start to go further down, that will lead to a more abnormal trading day where we are exhausting some average ranges, things like average daily and average session range. Whether that happens or not, again, we're going to see. But the biggest takeaway here is, because I see people FOMOing in here, is to just breathe. You know, we cannot just sit at the trading station and immediately start to go, oh my God, it's moving, I must get in. You can't do that as a trader. It doesn't matter that it's moving. It matters where it's moving and whether you have a way to limit risk. Now, structurally, from that larger time frame, we have the previous day's high all the way up at 77.55. The current day's high, looking at the entire 24 hours, is sitting around 76, so just under that. So that's kind of one of the reference points. And I'm going to start drilling down into the Asia session and everything so that we can see how we can maybe take advantage of this and get some orientation points going. So let's now drop down to the 30-minute chart and to have a look at the profiles. What have I done here? I am typing into the symbol. I was typing my time frame. Lovely. Coffee required, clearly. And I've just knocked something off my desk. Never mind. By the way, guys, I do have more contractors in the house. So if there are like things happening and you hear dogs barking, that'll be why. This is crude oil. So I can see Jan in chat is asking, what is this? This is crude oil. Yeah, so crude oil inventory is today at 10:30 a.m. Eastern or 9:30 a.m. Central. All right, so from the looks of it, we are obviously below the Tokyo range, but at the same time, Asia low is going to become our level of interest. And also because that's exactly yesterday's low, right? It's exactly at 75.43. So let's plop a line. There we go. So let's name that as well. So I'm going to go to the settings and then text. I'm going to mark that Asia low and then previous day low. Let's put it that way. Okay, so that definitely becomes an orientation point. And then, like I said, I have the NFP range from last week also marked. The range from NFP was not supportive. It just kind of, the price sort of started running through it. So when we rejected that weekly demand area, we kind of bounced a little bit from the NFP range, but then the price just continued higher. After that, we didn't really have any test of the previous week's NFP, but there was another NFP 2 weeks ago that was somewhat supportive. So that was when you adjust for the contract difference, because it was in September contract. This is now an October contract. There was a range around this area that last night, pretty much into the open and into the close, was a little bit supportive. So we had a bit of a bounce, and that happened just into settlement and then just trickled a little bit towards the day. So towards the end of the day. So now we're seeing an auction fade from the London average session range low. And for reference, that is 74.64. But because of what we've got going on the daily chart, that reversal, the only thing that I would consider right now would be a short somewhere. Ideally around Asia low and previous day low. So that would be something of an area of interest ahead of the inventories. Now, once the inventories come out, it's going to be a bit of a storm in a teacup for about 30 minutes. So we're going to have a lot of algorithms. Nick Fortick says spazzing out, and that's pretty much what happens. So I don't like to get involved in that. And I typically wait anywhere from about 5 up to 15 minutes for things to settle before I start looking to see whether there is any opportunity. Now, in a lot of the days, inventories are going to be not that interesting. And it doesn't seem to be, like, I've been observing this market and trading it actively day for day for 11 years now. And I've very rarely see it make sense. As in, like, if you have a particular number that's either a build or a draw, or even if it's a complete miss, it just doesn't seem to translate into what the price is doing. So for me, that's nothing but noise. And a lot of the times analysts will be like epically wrong. They are just completely off the mark. And then you just see a neutral day type that is very range bound. It's like, well, if we were that wrong, why isn't somebody repricing this, And, maybe it's because very frequently you have reviews and revision of these numbers and whatever. And there's also an API number that usually comes out, actually last night after the bell. And maybe that's what's brought a little bit of bounce here for the London Open. So we're going to see whether we can get up to that edge of Asia. And I mean, we also have initial balance low not too far away from it, which is around 75.30. And if I look at the volume profile, there is a high volume node, the edge of the high volume node just in this area. Just before London Open, you see, we kind of built up a bit of structure there and then fell away from it. So that is definitely a whole area of previous day low and the initial balance low is kind of like, let's call it a supply resistance. It's definitely a point of interest. So if we don't get there, I consider everything else to be sort of middle of nowhere. So diddling in the middle is not something I like to do. Maybe if we're breaking out of some important structures, like let's say we've had, an initial balance that touched the previous day's outer value area edge, and then we sort of break out of it, reverse from it, and then go into a sustained auction away from it, that's something that I would consider. But right now, we don't really have any such things. When it comes to the profile open sentiment, we have short overnight inventory, so effectively a gap down when we're looking at previous day's value area, just from London. And like always, my London value is a shortened version, so I cut off my calculations for London at NYMEX open, right? So it's from 8 a.m. to 2 p.m. London time. Why? Because otherwise you will get data pollution. There's some very different players that are active during the New York session versus the London session. So to me, it's like matching apples and oranges, right? It's mixing two different players with two very different goals and outlooks. So I don't like to do that. So in all of my calculations, I will separate the London session from NYMEX. All right, so let's let me just adjust something here. Right, let's see where the NYMEX value is. Right, so we're also opening slightly below the NYMEX value, which is sitting a bit lower, obviously. So that's at 75.40. Okay, so there's that number again. 75.30, 75.40, Asia low, value. NYMEX low, so a lot of confluences around that area. So I'm going to put another rectangle there. So from the initial balance low and all the way here, this is just like a very loose, big area where I want to be a seller if all else permits. So if we don't get some crazy move after the inventories that kind of runs through it and keeps running through it, this is my area where I want to be a seller. And then if we do manage to get down to 74, and I mean even 73, if we run through the previous week's NFP range and get down to 73, that might be somewhere where I want to get involved. But if we start to accept the NFP range from last week, that would be a short for me too as a continuation. So that means we didn't manage to get up to the levels that I was looking at for any kind of a logical reversal. And that can tell you a lot. So instead of just going, it's moving, we have to find a position. Again, look at the orientation points. So orientation points are considered whether something is being accepted or not. That is the whole basis of, let's say, a value acceptance setup. So if the market opens outside of value, then goes to spend time inside the value area from the previous day, That's called the value acceptance setup, aka the special situation, where even though the short inventory overnight is on our charts, now we're seeing the acceptance of previous days' prices, previous days' distribution curves, right? That gives you a signal. And now sometimes it might be a little bit hard to limit risk if we kind of have an extended move into that. But until such time that the price is accepting my level of interest or a zone orientation of interest, there is nothing for me to do. And that's kind of how I would do breakout trades. So I wouldn't necessarily do breakouts willy-nilly middle of nowhere just because I had a random high or low. I would look to see what's going on either from the previous day's range and or previous day's value if we're kind of sitting somewhere in not too far away from it. So hopefully that gives you a bit of an outlook of how I look at the markets. As always, I am looking for a price action pattern or order flow on Bookmap, or even just like sort of time and sales, even though I find it a little bit easier to see those same events through a visualizing tool such as Bookmap, because that's all it is. It's just a visualization of time and sales in the DOM. So we have these orders on the ladder, and you can even begin to see where some of the bigger players are located. So this is now going very granularly in relation to what we already know. So I'm not looking for random, there's a 64 on 74, 77 price. I'm not doing that. I'm going, where was my zone of interest to the upside, because that's where I want to become a seller. So all the way from 75, let's say up until 75.60, 75.30 up to 75.70, a nice sort of 40 tick area to look for interesting things. So now if I go back up there, I can see there's some orders sitting at 75.30, which is the initial balance low. So somebody else might be looking at that. We have a lot of offers sitting there. If I keep going higher, well, at this particular time when New York is not open, we don't have the US, there's nothing. It's pretty thin. So if we do manage to go into the initial balance, at this point, there's not that many orders that will stop it from going further up. So that tells me an additional piece of information. And then the higher up you go, the gappier it goes, obviously. Now let's see what we've got to the downside, because, if this starts to fall, like I said, we have NFP around 74.20 all the way down to 74. So 71 and 51 contracts around 74.42 and 74.40. 74.40. So maybe we might have an opportunity for a scalp down there for them to grab liquidity before we find out what they do around it. And then again, nothing really of note until the big number of 74. That's where you have 73 orders just sitting there waiting. You know how I have my chameleon, Bob is his name. Our Bob. Our Bob. So 73 definitely is a huge chunk of orders there for this particular market, because it is a thinner market, and that's sitting at a round number. So that's significant. And then further down, again, pretty patchy. However, liquidity all the way down to 73 evens, right? So we do have a very similar outlook of whatever I'm seeing on the chart. So we have Asia low / initial balance low with enough orders there. And then we have the round numbers, 74 and 73 as definite sort of points of interest. So that's how I use DOM. That's how I orient myself in the market. I'm trying to make this as simple as possible. And I'm trying to go from a top-down approach. So trying to go from a high time frame, weekly chart, then going down to the daily chart, which is also pretty high. Sometimes I look at a 4-hour chart. In fact, I will always have a 4-hour chart somewhere on one of my screens, because I feel that gives you more of an idea of what's already been done. and whether we have red candles, whether we have green candles, whether we have any wicks developing. I just find that keeping those higher time frames is very, very important for the overall outlook. And then you can stare at the 1 and 2 minute charts and the dome and the book map, all you want, right? But until you have all of these other things that you're finding your path in, I feel you can get lost very quickly in a 1 minute chart before you know what's going on in higher time frames. And I feel that kind of tends to happen with people on a 5 minute chart as well, because if we go down to a 5 minute chart, you're going to see that like we have a bounce, right? So some people might be going, all right, we have a mean reversion up to 21 EMA, let's do that. That could be a scalp for sure, but it's against the larger time frame picture that we currently have developing. I see 4-hour chart is falling. Yes, there's some buying wicks, but generally it's pretty red. And then all of the other candles that preceded it, they're pretty red. What do we have further down? Well, nothing really until we get from a very large time frame, until we get down to the 73 level. So anything in the middle from that larger time frame is a little bit unclear because we're in the middle of the range. So in order to not get lost in all of this, how do I come up with my bigger opportunities that do bring me sort of 50 to 70 ticks in profit on crude oil? It's because I am very, very selective with when I'm going to go in, which is why a lot of the times I'm not entering willy-nilly, just for the sake of entering. The only time I will do scalping is if we already have a neutral day type. So I've, come to trade and I see the extension of the initial balance to both sides. Then I can scalp. Why? Because we have a range. So we've not been able to move away from the initial balance. We have not been able to move anywhere. And we're just sort of like an elastic band pulling on both sides of the first hour trading range, and both parties are just kind of fighting it out, doing the tug of war. If you've ever seen two dogs, how they play tug of war, they go, but ultimately they're not really going anywhere. That's the whole idea behind the neutral day scalping. So when we have a neutral day, I will absolutely scalp. But where do I scalp? Well, not in the middle. It's always going to be at the edges of those ranges. And those days can be actually pretty nice if you can limit yourself just to the middle of the range as your target, and then you reset the setup and you wait for the other side to appear. So you don't hold it from one end all the way to the other side. Sometimes you can if the trend is strong and if you have other things going for it, but for the most part, it's going to be, do one trade, keep it for about 15-20 minutes, exit in the middle for 20-30 ticks, then sit and wait until the other side appears, until you have that second standard deviation. That's when I start using them a lot more. And then just looking for that, I look for a zone between the second standard deviation and third standard deviation. So I don't look for breaks or anything. I look for the price to kind of migrate back into that zone. And then I look for my granular setups that sometimes involve things like stop runs through previous session highs and lows, and then kind of sniping them back towards the middle. So those are some of my setups. Obviously, I have the failed auctions. That's the bigger setups. But failed auctions can also happen during the neutral days as well. All right. Let's have a look at what we've got. Xavier says, GC had a nice sell-off in Asia session. What are your thoughts for the NY session when you see earlier moves like these? I would say this is just the hedges just kind of getting ready for the inventories maybe. So usually people who move these markets are typically, producers of the commodity itself, and they want to hedge their risk against prices falling. This is why you see crude oil in downtrends a lot, right? And that's when, the hedges sort of step in. So every time you have EAE inventories, there will be a bit of that happening. But at the same time, how is this auction doing for today? I mean, I would say it's doing okay, but it's still not really shooting completely to the downside. In fact, all we've had is one 30-minute candle that fell away. And now we sort of we're sitting still in the range of that candle. You can consider it, I suppose, a fair value gap if this leaves if this doesn't make a new move to the downside. We're going to have a little single print left behind. So that might be something to look at. But then depending on where the next period opens, it's going to give me an idea whether we're building structure or whether we're kind of reversing and going into a single print fade. So effectively fading the single prints. Now looking at the volume profile, again, it's not that thin. So I'm just going to jump to a 30-minute chart. On a 30-minute chart, it's a little bit thinner, but as you can see, it's still creating a bit of structure around 74.80 and 75. That's usually not that conducive for a trending move down. If we then also print the next TPO periods, still in this same range that we've now been in for, well, I mean, almost an hour, really. This is now potentially a new intraday range that you can maybe use for some scalps intraday. I don't really like doing that because again I want to see my big orientation zone. So really ideal situation here for me would be if we take out the single prints, get to the initial balance low and the previous day low / Asia low. Again, lots of confluences there. So 75.40, 75.30 is where I want to see a reversal. And that would be my trade for the day, ahead of the inventories. And then we're going to see what happens during fast markets. I am on fast markets today, so you will see me moan about the inventories being a storm in a teacup as always. But yeah, there have been opportunities after that, but I've been a little bit unwilling, it would be the right word there, to jump into momentum trades on crude oil, because for the last 8 months we have been in a very weird mood on crude oil, where there was just no follow through on most days. Like even Nick Fortick was talking about it, not that he trades crude oil that much, but he was saying that crude oil is just weird. If we look at the daily chart, so if we look at the daily chart, like we have been moving, but this is a daily chart. Just look at how horrible this price action is here in the middle. So let me just make that bigger. Actually, let's just make this all into one chart and maybe widen that. So if I show you this area, yes, it's a consolidation on a daily time frame, but even if you analyze how we got there, we only really had one good trending day, then chop, 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 chop. That's 4 days of chop, guys. And then one good day move, and then a little bit of chop here before we try to go higher. But all of this is just like 100 ticks, 120 ticks range, barely. And then again, chop, 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 chop. Like it's very, very difficult to have anything apart from like 30 to 40 ticks in those sort of markets. So another interesting thing is that things have been moving during London for 2 weeks, but they weren't doing that, for the last 7 months. So this is why I was, just one moment. All right, so the contractors are going in and out of the house, and the dogs are on the upper floor here with me. But they're outside of my office in the other part of the house. But still, they are barking, so I do apologize for that. Hopefully you're not picking up too much of that. Yeah, so crude oil has definitely been weird. But I've still noticed that it kind of follows its own... that it still kind of follows its just 1 minute. All right. Yeah, I still noticed that it followed the same sort of patterns, but with not much follow through. So we would still get that reversal after the 9 a.m. Central Time, but then the failed auction would not actually go anywhere. It would just kind of get stuck in a 10, 15, 20, 30 tick range. And by the time that it fell into the area, it actually already created a candle of 30 ticks. So it would look very locked up. And then we used to have these nice rallies into the settlement, which we started seeing again literally in the last 2 weeks. So hopefully things are moving a little bit more in crude oil. Therefore, I can go back to my normal product that's been my bread and butter for the last 11 years. And we can maybe start to see a little bit cleaner price action. Obviously, this was March. March was absolutely horrendous. Very difficult. I mean, daily chart, look at this. Since when do we not have clean trends in March? So that's why, I was hopping around different products to try and see if we can find another thing as juicy as crude oil. But, like always, I tend to come back to crude oil over and over. So if you look from last year, so March last year had a very nice sort of reversal, then up, a little bit of a sell-off, and then again, large move, push, bit of a consolidation, push. So everything was clearly in a bit more of a trend. Same thing if you look at January 23. February was a bit weird for me last year as well. So there's something to it. We were kind of talking about maybe some seasonality here due to there's a seasonal disorder thing that happens to people in February, and that tends to be very much reflected in the markets. It's a very bizarre sort of phenomenon, if you will, that people get a little bit depressed for the lack of sunshine and everything, and then they're just like, don't want to trade. All right. So let's have a look at some questions. Huge Sky says, Dee, is your preferred high time frame on crude oil 30 minutes, or do you analyze off 1 day and trade off 30 minutes? So maybe you didn't join the stream early, but I did go through an entire top-down approach where I started off on the weekly chart. So I start on the weekly chart, then daily chart, and I look at those every day. I do go down to a 4-hour chart as well. And then I drilled into the 30-minute. Now, 30-minute is the starting point for the intraday analysis that I do. And this is something that I've learned in one of the first companies that I worked for. And then later on added a lot to my knowledge because of Hogue. Hogue was my mentor and continues to be my mentor as well. So in that respect, I suppose if you're looking for intraday setups, I would start on 30 minutes, yes. But do I solely trade off 30 minutes? Not really. Intraday profile very heavily relates to real-time events, irrespective of what's going on a 30-minute chart. 30-minute chart becomes your sort of a confirmation, right? But sometimes if the price is actually, let's say I'm looking at a failed auction, right? So let's go down to a 30-minute chart. So today we don't have the failed auction, but I'm just going to kind of hypothesize. Let's imagine. So the initial balance, I'm going to grab actually this one and repurpose it. So the initial balance on crude oil was this, right? That was the range. Sorry, this was the range. Okay, so that's the initial balance, right? If I was looking for a failed auction, this is an out of our session, and the initial balance is very small. So I can't wait for the full 30 minutes to make up its mind. Therefore, I will front run a trade just on the fact that we are spending a little bit of time, more time than you would want for a trending move, right? So you go back to the initial balance and you just can't seem the price is not really exiting it. So I'm looking at it on a 1 minute, 2 minute, 3 minute. and it's still spending time there, that would be my sign to try and front run the failed auction, thereby getting in way ahead of the 30-minute chart, actually printing it. Because what can happen on low initial balance range days is that the price just goes straight through it all in one go. That, when you see that happening, that's a sign of a very likely range-bound day, okay? Very likely. If you see the price just smacking through the entire first hour of trading range to the opposite side and then kind of starting to create that wick back the other side, that's your range-bound day. That would be the first sign, the earliest sign that we have a range-bound day. That's why sometimes when you see those crazy moves on NQ and ES that do that, I will immediately say, guys, I think this is starting to smell like a range. And usually I just, most people are like, yeah, whatever, man. And it ends up not going anywhere. And that's one clue that I look for. So it's not like a random observation that I've just said, oh yeah, we have a range bound day. It's because I've observed over and over that when we have such violent moves that jump through the entirety of the reference area that we were looking at before, that's why I say range. Okay? So hopefully that might make it a little bit clearer when I'm screaming range during the fast markets, why I'm doing that. Even though we have a massive wick and a huge sell-off, that never or very rarely leads to a true trending day. You will very rarely see true trending days start off with a massive move that smacks through the opposite side of the initial balance. It's not impossible, but we need to have a catalyst for that. We need to have something like rate decisions, somebody speaking, where the Fed speakers, yapping about, whatever they're going to do or not going to do. Some sort of a catalyst that can bring further energy into that move. But if outside of that, it's just not going to happen. We're going to run out of steam. And people are just going to be like, all right, that happened. Let's go back the other way. Because whoever was already in on those moves, they're going to be taking profits. And then it all just pings back up the other way. Whether it's long or short, matter of context, obviously. But yeah. So that's one way that I would look at it. Ashwin John says, can you explain how in Bookmap the cumulative volume delta is showing negative? How to trade based on that? Cumulative delta for me is not a huge decision maker until the last hour of the day. I feel that it's very dependent on how aggressive the short-term participants are. That's what it is, right? It's not indicative of the direction necessarily, because I've seen positive delta, heavily positive delta, on a very, very much of a sustained auction down day. So completely the opposite. And then you're kind of just going, well, what's happening here? Delta is positive. It's because the bottom pickers, when the prices are just falling, they are aggressive buyers. They're buyers that are effectively stepping into the market with the stop loss below whatever the low was for that particular time of day. They get run through by other people pushing through their stops. So what is a stop for a buy order? It's a sell, right? So that pushes, the market orders. The cumulative delta looks at market orders, right? So what are the bottom pickers doing? They're buying it and then getting run over and then getting run over and then getting run over, right? But sometimes if you have negative delta that is matching whatever's going on in the profile, on the actual price. So let's say you have shorts in crude oil with negative cumulative delta. You can basically have a stance that delta is congruent with direction. So there's nothing more to take out of that. It's like delta is negative, price is falling. Everything matches up. Now, where you get the short squeezes is when the delta keeps going positive. So the bottom pickers are trying to do their job and getting run over. So delta keeps growing. It keeps growing. It keeps growing, but the price is falling. So they're not getting what they want. At some point of the day, you can get a short squeeze because all of those people that were long they, got run over, bringing more volume into the market. And then at some point, those guys who were also short on the way down, taking the orders from the guys that were trying to bottom pick, they all start taking profits. And that's when you just get a crazy short squeeze. That's why it's important to keep an eye on Delta. But for me, it's not, especially not for something like crude oil. Crude oil has its own mindset. And while it is a speculative product, its main function is to limit risk for the crude oil producers, like oil refineries and stuff. That is the people who mainly move these markets. Whereas something like NQ will be heavily speculative, like the majority of the moves happening in NQ are due to the speculators. It's a thin market already, right? And then when you add in the speculators into the mix, market makers have a field day with you guys. It's like, they're just like, oh, let's just take this guy's stop. Look where the stops are. Let's take that. So, that's the kind of idea behind the speculative products versus the products that are actually being used to hedge real risk for the producers of that product. And sure, you can also have users of these products doing the same. So you can have an airline company that uses a lot of, gasoline, a lot of effectively crude oil derivatives. They might want to hedge their risk in, against the crude oil rises, prices rising. Let's do that again, Dee. Against the crude oil prices rising by also hedging their risk, hedging downside, controlling downside by, hedging in the actual crude oil market. So it's a very different market to NQ that is purely speculative. So hopefully that makes more sense. That's why some people are like, my God, crude oil is so difficult to trade, because they don't necessarily have an understanding of why things are happening. So if we go back through the summertime, so let's go back up through this day. No, actually, let's go to 1 week, because we might be able to see that a little bit better. All right, so as soon as June began, so this is where the fundamentals in crude oil and understanding them come in. As soon as June started, we reversed the trend and started going up. This is not just a price action thing. This is actually the reason why this trend existed, is because there is something that needs to happen with the summer mixture of crude oil derivatives, natural gas and gasoline, aka RBOB, right? I trade that too. So during the summer months, because of this, there is an increased demand in these derivative products in particular, but also in crude oil. So because of this extra mixture that they need to do, there will be a lot of people getting more crude oil to make this new summer mixture that won't like effing explode or something. So that's why you see more upside during the summer months in crude oil products. Likewise, once the summer ends, you can see more shorts. So we're possibly seeing that now in the market. So having that awareness of why things happen in crude oil is actually a pretty good idea for anyone looking to trade crude oil. But if you want to trade it just speculatively without understanding how crude oil reacts to geopolitical risks, why it would react that way, what is the interest rate effect of hikes or cuts on crude oil and how that impacts the entire market, you're always going to be on sort of the back end of everybody else doing something that makes sense, right? So instead of looking for just a pure price action, maybe consider using like 30% of your analysis that will be dedicated to macro side. You can't just trade crude oil with blinkers on and go down to a 1 minute chart and without knowing anything about crude oil, just going, it's crossing over, it's 90 MA. Let's go long. That's great. But if you're against whatever the larger players in this market are doing, you will always be one step behind, because they're doing something, you don't understand what they're doing, and you're just like, why is crude oil reversing in June? Because summer oil demand goes up. So that's a part of the macro analysis, which is very simple. You don't need to go into like super granular. Just going to find out the basics. the trends and why they happen. So in crude oil, there's a very, very common reason for it, especially during the summer. So we spoke about this on TopstepTV before. And then geopolitical risks. Why is crude oil so sensitive to the Middle East? Because the Middle East is one of the biggest, if not the biggest, crude oil exporter in the world. What happens with the Chinese oil demand? If their oil demand goes up, that will have a huge effect on crude oil. Why? Because Chinese oil demand accounts for 15%, 15%, 1-5, of the entire world's oil demand. Okay, that's a huge amount. So you have to keep a pulse on how the Chinese crude oil demand is going, right? Is it falling? Is it rising? Okay, so let's move on. John says, how come I don't see people using trend lines? Because this is intraday trading. If you're looking at a market from a vertical point of view, that tends to bring you very late entries into anything. Crude oil, in particular, requires a certain amount of precision, and I would argue NQ also requires a huge amount of precision. So let's have a look at NQ chart, and I'll show you what I mean. Let's go up to a sensible time frame. So let's say that you were looking, and also trend lines to me, unless you're a swing trader, they don't offer a very good way to limit risk. So what would a trend line entry into this market be? Let's say you identified here 1, 2, 3 points of contact, right? So we have a trend. What will your entry be? It would be the crossover and a break to go long, right? And when do you confirm that? Well, only when the full candle, according to trend lines, would actually go to the opposite side and clearly close and open outside of it, right? So your entry really would be something like this. This is a fib tool that I've just hacked, okay? So that would be your entry, right? Where is the low of this whole structure? It's down there. What does NQ like to do? It's slippy as hell, right? It runs through stops, runs through everything. Now, this is an out of hours session, so it looks a little bit more sane. But if you try to do this, chances are there are market makers and, speculative players as well who know that a lot of people will be having their stops, not there, but also there, and also there, and then also all the way down there, right? So they will try and take that. And if you were to properly limit risk for any sort of an NQ trade that's not going to last 3.5 seconds, you really need to have your stops all the way down here. So the trend line entry into that sort of a trade, what does that do? It makes you have to use a bazillion tick stop loss, which in intraday is never going to work, okay? NQ is very expensive, so even if you were trading MNQ on this, let's see how much risk this actually is. So let's see, that's 608 minus 554, 55 ticks of risk. Sorry, points of risk. So even there's 220 ticks that you would need for a stop loss. Even on a micro, that's already 110. On a full contract, you would need to have over $1,000 worth of risk capital per trade to actually enter this, right? Now, what's a better way? Well, a better way, away from trend lines, is to actually look at the horizontal price action. So where was this market actually supportive? Like if you neglect this nonsense here, well, we've actually had a pretty good support in the zone around here. So this was one area where the market turned around. That's also kind of the area where we chopped around, but I never traded NQ without ES supporting the ideas. But just for the sake of clarity and stuff, I'm not going to mix and match today. So this was obviously quite a big supportive area. That's where we turned around. Then we tried to go through it, failed it, reclaimed it, and went back up. So that remains an area of interest. Now, without looking at any trend lines or anything, you can actually see that that area was once again supportive in the overnight session. So why not use an earlier entry of actual price action and maybe some VWAP. So we go below VWAP, that immediately, so below VWAP into support, right? That immediately becomes a decent area to get involved. And then you have a clear long. So now you're limiting your risk because you've caught this pretty early on looking at a horizontal price movement rather than a vertical price movement. And you can see that it starts to reverse. So you go in when the market creates a low. Let's see what this looks like on a 15-minute chart. Whoops, so let's delete that. Okay, so we start to see a reversal. This is a stop run, right? Typical stop run when Asia starts actively trading. So that's one of the things that I look for. Stop runs into previous larger areas of reversals. And then we start seeing the slow crawl up, limiting your risk, increasing your risk reward, and still, making some pretty good cash here. I mean, this is the kind of trade that you can go to sleep with. This is probably what Dakota does. I don't like to do that, but, because I would always, I wouldn't sleep, I would just have one eye open all the time. But hopefully that makes sense, because trend lines, if you don't have the time constraint, and also, trend lines on low time frames, the lower the time frame, the less reliable the trend lines are. And for that matter, the less reliable anything is. This is why you need larger time frame levels, even if you're going to scalp, just to see what's happening. Whether that's a low volume node from a 30-minute chart, 4-hour chart, whether it's VWAP, whether it's like anything that brings a little bit more of a wider picture into the market, it can help you to not get completely run over trying to enter trades on a very, very small time frame. But yeah, when you don't have the time constraint like we do in intraday, you can use 30 minutes, 1 hour, 4 hour, and daily trend lines that would be better. But we cannot hold positions overnight. We have to close at the end of the day. That brings problems for swing traders, especially if the position has already gone into profit, and then you're now looking at, potentially opening up another trade that will then potentially eat up all of that profit that you've made because you had to close out at the end of the day. So for me, trend lines are very wishy-washy as well because they're not well defined, in my opinion, and I don't like them. I will be straight up honest with you guys, I don't like them because if you look at the 3-point touch, then sometimes you have a very steep trend line. So it's like the further down you go, the less accurate they become. And then there's always the never-ending question when you have a huge trend. Well, do you fish for a reversal? What if we're very far away from trend? Is that a mean reversion? And to me, I'm a huge contrarian. So I don't like going with the perceivable trend. I want to catch a move in the opposite direction to like a sensible degree. I'm not a lunatic that just kind of goes, it's going up, let's go down. And things like that. So I want to see evidence of the trend losing steam. That is the way I trade. And in fact, today I have the podcast with Austin Silver coming out. So in that interview, he actually asked me if I had to only trade one setup, what would it be? And I explained to him what that was. So check it out. It was such a good interview. He's a very good interviewer. Even though we don't really know each other, like we know each other from TopstepTV, but we've never actually shared a stage together. I felt like I was talking to a long-lost friend. Like, seriously, it was just very comfortable. Because sometimes in interview situations, things can be a little bit uncomfortable. And you feel like you're like, oh, God, okay, that's not a very good question. But it's just the way it was just flowing. And, he's obviously a very good conversationalist. So, yeah, I really enjoyed it. And make sure you check it out later. All right, guys. So if you like what I'm doing here, let's do the audience interaction part. Make sure you click the like and subscribe to the TopstepTV channel. You also have my links down below. So, maybe subscribe to my following as well. I do have some very different videos on my channel, but they're very helpful. They relate to order flow, some common problems and then common solutions for the trader issues. It has a very kind of fun, engaging twist on it. But obviously, if you keep liking the stream that we've got here, that tells the YouTube algorithm that it's got engagement, and that's how we can keep this channel growing. In my head, I want to make TopstepTV into this like huge sort of channel that has 3 million subscribers, but let's try and get it up to 500,000. So that's, in my head, 500,000 subscribers would be absolutely amazing. So let's keep that growing, and we're not going to get there without engagement. So click that like button, okay? Not the one in the chat, but the one below the video. All right, so let's take another question. So Candy Cane says, Dee, which settings do you have on the dome? So this is a commonly asked question, actually. The reason why I have all of these levels here is purely because I'm subscribing to level 2 data, right? So that's something you have to do in your billing section. Sometimes if you purchase a new combine, it would flash up at you a prompt. Do you want to purchase level 2 data? That's what that's all about. So instead of just having one level either side of the current price, you get the dome. So you need level 2 data, right? I have level 2 on all of the platforms that I use, and I find it very useful once you get down to that granular level, and especially useful for my ES scalps towards the end of the day, because those are all scalps. I usually trade for the last sort of 30, maybe even 20 minutes before the market actually closes. And that's like my ES trade usually. But yeah, all of these levels, if you want to get 100 deep on some of the more regular products, this comes straight from the CME exchange. So these are not orders that Topstep has placed as their A and B book. This comes from the actual exchange. So all level 2 data on all platforms from any provider will look the same. This is the beauty of trading futures contracts. It is a centralized market. So sometimes when you get to Forex prop firms, they have A and B books. Everything is SIM as well, but they still have A and B books. And then they will use these weird spread settings to mess you up. So that's why I stick away from Forex prop firms. I am only futures. FTMO is probably one of the only people that are very reputable in that space. So if it's not a futures firm, just run away. That's all I'm going to say here. All right. Not a trade question. Is Topstep bringing any new offers? No, not at the moment. I think Michael Patak realized, so you see, I'm kind of with him on this, because let's talk about the elephant in the room, what's happening with Apex, right? So they've brought in a whole bunch of new rules. Why? Because the permanent discounts had brought gamblers into the mix. So now they have to make sure that the company can keep going, right? But at the same time, that calls for changes in the PA accounts. We don't want Topstep to go down that route. Why? Because we don't want gamblers. Very simple, right? All of these prop firms, whoever's in the future space, they all have their place. And, I can appreciate that the cost of entry into something like discount firms is much lower. But at the same time, what do you get? You get not much. You get, you don't get education. You don't get TopstepTV, right? You don't get any sort of TV. And if you change from, 1 to 2 contracts, now you can get your payout denied. So that's stressful for people. You should be able to trade your strategy and to control your size from like 1 to 2, depending on whatever is going on. You should be able to control that as a trader. You should also be able to decide whether you want to add to a position or not, if it's in a drawdown, especially if you're trading with size. But obviously, now that's all changed. So obviously we don't want Topstep to do the same. That's why I doubt we're going to see discounts. I think it's already cheap enough. So if you can't afford to pay $49 for 50K, you shouldn't be trading. That's my personal opinion. I think you have bigger financial problems in your life if you can't afford a budget of $49 for a combine. And how are you going to be a trader? This job is not about clicking buttons. This job is about managing your money. If you're not managing your money in your private life, you're not going to manage it well. here. I'm sorry to break it to you. I'm really sorry to burst your bubble. But if you're bad with money elsewhere, you're going to be bad with money as a trader. So sort that out first before you start coming here and going, hey, do we have any offers? We don't have offers. Everybody's working on getting the support up to par. So they're changing the whole support. And, so offers are not going to be here. I feel that Topstep, for what it offers, is actually very, very cheap. Where can you get free education like that? Just by going on YouTube and going TopstepTV, right? No other company does that. They all charge cash for it. But at the same time, if we start doing all of the offers and fire drills and everything that we did at the beginning to grow the channel and to get things out there, all that we brought were people who were not in a very good financial situation. And I felt that in my side of the business as well. I have an educational courses side and a software development side as well. So you can always go down the route of cheap but low quality, or you can go quality but more expensive. So what do you want? Do you want cheap or do you want quality? You decide. I'm going to leave you on that today. So I am going to finish it up for today. I am on fast market, so I'm going to go and rest. Thank you again for being here. Hopefully you found this session useful. Unfortunately, my level never came in on crude oil. So let's have a look at that again, just before I leave you. We have a bit of a range developing now, so one of the things that could be possible is little scalps around this range. But again, it's it's not the biggest range, so I would probably aim for 18 to 20 ticks either side. And yeah, that could be something to do. As we're in the middle of this range right now, there is no trade, sadly. So again, wasn't able to find a good trade on crude oil. But 75.09 would be an area for shorts, and until that changes, 74.50. Area for longs. So literally just working within this little puppy here. All right, guys, let's see what happens with the inventories today. I will see you later on. In the meantime, let's try to be less Muppet and more Market Stalker. See you later.